Good day, everyone. The fourth quarter of 2025 delivered a powerful finale to an exceptional year, where volatility was matched only by resilience. Risk assets not only endured a historic 43-day US government shutdown, multiple interest rate cuts, and a record high gold prices. Quarter 4 of 2025 cemented a rare achievement. The first time since the pandemic that major asset classes produced a positive annual return. This synchronized global rally, particularly the breakout performance in emerging markets, underscored the resilience of the markets during 2025, even in the face of pronounced uncertainty. For South African investors, though, the resilience of the rand saw it gain more than 12% against the US dollar throughout 2025, offsetting a significant portion of their global investment gains. US stocks had a strong fourth quarter, with the S&P 500 rising by 2.6% in USD terms, while global equities rose by 3.3% in USD terms, but ended the quarter at -1% in rand terms. Emerging markets experienced a strong performance in the fourth quarter of 2025, up 4.7% in USD terms and 0.6% in rand terms. Global bonds delivered modest returns during the fourth quarter, with a total return of just over 0.1% in USD terms and -3.9% in rand terms. These muted returns reflected investor skepticism about long-term inflation and rising fiscal deficits in developed nations. Global property had muted quarter, down marginally at -0.8% in USD terms, but finished the year in a positive territory, up 10% in USD terms, but down -3.5% in rand terms. Back home, the South African equity market, the JSE All Share Index, continued its record-breaking momentum, up 8.9% for the quarter and 42.4% over the past 12 months. South African nominal bonds continued their rally during the fourth quarter, with the JSE All Bond Index up 9% over the quarter, delivering a 24% over the past 12 months. Cash, on the other hand, delivered a steady return of 1.8% for the quarter, equating to an annual return of 7.5%. This is as a result of the South African Reserve Bank's 2 further interest rate cuts in the fourth quarter. Cash yields were on a downward trajectory, making them less attractive than earlier on in the year. Let's take a closer look at the performance of the Focus multi-asset solution over the past quarter. The Momentum Focus Fund of Funds and model portfolios continued to deliver on their investment objectives during the fourth quarter of 2025, ending the year stronger. The positive momentum in local market performance translated into another good quarter for the Momentum Focus Fund of Funds and model portfolios. Our overweight position in local equity contributed positively to performance and also helped to offset the impact of strengthening rand. That detracted from the performance of global asset classes in these solutions. MFP Focus 3 was up by 4.8%, while Focus 5, 7, and 7 unconstrained model portfolios were up by 5.7%, 5.3%, and 4.9% for the quarter. The Momentum Focus Fund of Funds 3, 5, and 7 delivered returns of 5.8%, 5.9%, and 5.6% for the quarter. The one-year returns for the fund of funds, as well as the model portfolios, are also ahead of their benchmarks and peer group. Exciting news. The end of March 2026 will also mark 5 years since the inception of the MFP model portfolios. So we'll then also have 5-year live track record. The MFP Focus model portfolios continue to deliver on their objectives since their launch 57 months ago, with all portfolios ahead of their benchmark and peer groups over the period. Now let's take a closer look at the global managed solutions. All three global managed solutions delivered positive dollar returns during the quarter, ranging from 1.6% for cautious portfolio, 1.5% for the managed portfolio, and the growth performed broadly in line with its global cash, which is 1.3%. Let's take a closer look at how the environment played out for the underlying funds. As you'd expect, gold investments were up significantly as the gold price raised past the $4,000 mark over the quarter, increasing by over 12% over the last quarter. This in turn benefited the 91 Global Gold Fund, which was a strong contributor to performance. Within equities, the Momentum Global Equity Fund underperformed the global index. This was because the underlying quality bias of the funds, such as Even Load Equity Fund and the Robeco Quality Fund. Conversely, Artisan Global Value Fund was a standout performer due to their overweight to financials, which contributed significantly to the performance of the portfolios. Overall, it was a mixed quarter for the underlying holdings in the portfolios, with developed equities detracting and a positive performance coming from fixed income and gold. Please join us for the upcoming Outcome Matters session where we will discuss the topic in greater detail. That said, staying invested contributes significantly to how successful one will be reaching their investment objectives. So remain invested. Thank you.